Hey Matt, how do you know if a company has a competitive advantage?
Yeah, that's an important question. One of the things that I look for is if a company has a competitive advantage or what they call an economic moat. And I really look for whether the company's competitive advantage is durable. So, one way that you can tell is by looking at three metrics. One is operating profit. If a company has a competitive advantage, it should have a very high level of operating profit relative to earnings. So, we can take operating profit and calculate what's called an operating profit margin. You just take operating profit and divide that by total revenue. If a company has a competitive advantage, that operating profit should be significantly higher than just industry average. Second thing you can look for is a metric called free cash flow. This is the cash flow that a company generates after it is reinvested in fixed assets and working capital. And a company that has a competitive advantage should be able to generate a significant amount of free cash flow. The third metric you want to look for is a metric called return on invested capital. And there are a couple of ways to calculate this, but I think the most effective way is to take operating profits, subtract out a tax provision that's called after tax operating profits or net operating profits after taxes. And you look at that relative to the total of debt and equity capital. And if a company has a competitive advantage, that ROIC, return on invested capital, should be significantly higher than average, say a minimum of 15% or so. So those are the three things that you want to look for: um, operating margin, free cash flow, and return on invested capital. And then beyond that, you really want to ask qualitative questions about the sustainability of that advantage and how customers feel. There are different things that give companies a competitive advantage, like brand. So brand loyalty is very important. Um, Patents and copyrights can certainly be important, especially in the case of trademarks, copyrights, patents, when you have certain protections around a company's property. That's very important. Another thing is network effects. Network effects are just where, when you have more people coming into a network, the value of that offering goes up over time. So you want to identify that competitive advantage through the financial statements and then sort of dig deeper with qualitative questions. And that really is going to drive, along with the valuation, that's going to drive the investment decision.